What's up, guys? Welcome back to DCA. So today what we're going to do is talk about Bitcoin. And in particular, we're going to talk about Bitcoin in relation to the stock market. So as we all know, there's a lot of macroeconomic uncertainty at the moment. And what I want to do tonight is simply go over the stock market's price history since Bitcoin has been around and sort of explore what the worst case scenario may be. The reason I want to do this is because if you look at the stock market over time, since Bitcoin has been around, it has performed exceedingly well. Okay. So, Bitcoin, or the stock market rather, was at around $2,500 when Bitcoin first came out. Currently, we're trading up at around $13,500 and as high as around $16,000. So, we're going to talk about this. And we're going to look back historically in order to understand what could potentially happen in the stock market and what the implication of that may be for Bitcoin and the cryptocurrency asset class in general. Okay, so what we have here is the price of Bitcoin on top and the NASDAQ Composite Index on the bottom. You'll notice that they're color coded. And all this indicates is simply if the asset is above its 20-week moving average, or the index in this case, then it will be blue. If it's yellow, that indicates that the Bitcoin or the NASDAQ Composite Index has fallen below its 20-week moving average. If it's green, it's fallen below its 50-week moving average. And if it's red, it's fallen below its 100-week moving average. So as you look at the history of the stock market, we can see that the stock market has more or less done nothing but go up since Bitcoin first came onto exchanges. So, dating back to around 2010. The last time the stock market had a large correction was in fact right around when Bitcoin was actually created back in 2009. So we had a large correction in 2008 into 2009. And in fact, if we just measure it, it was about a 55% correction, which if you're exclusively in the cryptocurrency asset class, that may not sound like a lot. But in the stock market, that's a big deal. That is a large move to the downside. So what we're going to do tonight is take a look first at Bitcoin, and we're going to compare it to the stock market, and we're going to show how Bitcoin reacts in relation to the stock market when the stock market starts to show times of weakness. We're then going to go back and compare prior times in the stock market's history to its current time, to show just how strong in general the market has been during this approximately 11.5 year period. We'll start back here, back at this first cycle. So, what we saw is that Bitcoin was below its 20-week moving average, in fact, going below its 50-week moving average at this time. And you'll notice that non-coincidentally, the stock market was also performing poorly right at this time. So Bitcoin hit an all-time high. In fact, we'll bring this up. Bitcoin hits an all-time high right here in May of 2011. The stock market falls below its 20-week moving average, and that's around the same exact time where Bitcoin sort of ended this run in the early to middle parts of 2011 and came down. And you'll notice that I've drawn an orange line here. This shows you when we were able to get back above our prior all-time high close on a weekly chart. And that point was approximately right here. You'll notice that where Bitcoin was able to get back above its prior all-time high was right after the stock market started to sort of move back up again. So it was showing some weakness during early parts in the middle parts of 2011 that continued into the early 2012. Then we started to move up, and you'll notice that Bitcoin started to move up right around the same time. All right. Then we were sort of sideways, and Bitcoin kind of was hanging below its prior all-time high that it made in 2011 at around $20 or so. And then we got back above it once the stock market got back above its 20-week moving average and then continued to run up, right? And from there, going up approximately 74%. So then we go into our 2013 double peak cycle. And, we're kind of moving along. Everything's going great for both Bitcoin and the stock market. And, we sort of take a little break. And the reason that we do that, I don't think has anything to do with the stock market. I think it has everything to do with the fact that the asset had gone up 9,000% in about a year and a half's period. So we took a break in the middle of 2013. People took some profits, which is understandable. And then it went back on a second leg of the run, going from $70 all the way up to around $1,100. Bitcoin started to take profits again. People started to take profits in Bitcoin. And you'll notice that during that same time, okay, the stock market took a little break right here in 2014. It fell below its 20-week moving average. And that sort of just opened the floodgates for the market to just trend down. And again, it all makes sense, right? Like, if we just come from the bottom here, Bitcoin was up at this point 51,000%. So it was sort of twofold. Bitcoin was up 51,000%. People are going to take profits when you're up that much. In addition to that, the market sort of stuttered here, and that's all it took for people to just go completely risk off at this point. So you'll notice that in the depths of this bear market, right in here, from basically the middle of 2015 all the way through some point in 2016, the stock market was doing quite poorly. So Bitcoin was doing poorly during this time. Now, it did go on a run up from its lows of around $200, and if you want to count wicks, all the way down to $150. It had moved up some, but it wasn't able to truly go into this parabolic run until, if we just line these up together now, notice where it starts to get back above its prior all-time high. Right after the stock market also starts to get back above its prior all-time high. So the stock market starts to get above its prior all-time high right around here in November of 2016. And that's right where just, a few weeks later, that Bitcoin then goes on its run to make a new all-time high right here in around February to January of 2017. Okay? So right in the same period. So while this larger correction in the stock market actually saw Bitcoin slightly moving up, it wasn't able to go on its big run right until after this event, after the stock market started to show strength again. Then we go into 2018, all right? Everything's going great. We're up. If we just go from the bottom again, it's maybe not the best way to sort of calculate what the gains were, but we're up 10,000% from the bottom. And that's not bad in anyone's book. During that time, when did our market cycle came to an end? And that was right around here when the stock market, so back in 2017, and if we just sort of do this and we'll bring the price out, the stock market started to show there were a couple bad weeks here at the beginning of 2018, not coincidentally coinciding with the time that people went risk off, started taking profits. They're up, a lot of people are up 10,000% or so. And it just was a natural time for people to start to get out of the market. We're sort of riding down. We came all the way down to around $6,000 or so, and we were riding sideways. And now I want you to notice what happens in the stock market right here in 2018. There's a large correction that happens right here in September of 2018. And what happens when we fall below the 20-week moving average and below the 50-week moving average? That's when we have this severe capitulation event where we go from around $7,000 all the way down to $3,500. So again, we're seeing another correlation between the price of Bitcoin showing weakness, coming to a market cycle end, and the stock market showing weakness. Okay. Now it's all relative, right? And these events are sort of occurring in tandem, where the stock market goes on a run, Bitcoin goes on an extreme run, and all it takes is a small hiccup in the stock market, and you see Bitcoin sort of go spiraling down because people are going to take their profits. And if there's any fear or uncertainty in the stock market whatsoever, that's going to incite individuals who have been holding, long-term holders, in order to start taking profits. So, the stock market is sort of showing signs of weakness here from the end of 2018 all the way through 2019, where it's not able to make a true all-time high. And during this same time, you're seeing weakness in Bitcoin. So what we saw, the market just wasn't ready to go full out again because the retail market had not come back in mass. And then we had the COVID capitulation event. Both markets saw a massive correction during that time, which is entirely to be expected. And from there, we all know the story, and we just go on a wild run up to $64,000. Now, Bitcoin itself didn't have the type of parabolic move that a lot of people had expected on YouTube, where people, saying $200,000, et cetera, et cetera. And that's why a lot of people got wrecked right here, because they were FOMOing in to an asset. And in fact, we've showed on numerous videos now where the retail market is coming into the market right here at the worst time. The retail market's highest level of interest was in January. Okay, so retail is coming in, they're coming in right at around 45,000, FOMOing in at 57,000. And then, everyone on YouTube is saying, buy the dip. While at the same time, if you're using something like the DCA index risk model, we were saying at that time, if we just come to a daily chart, well, we weren't saying anything because I hadn't started a YouTube channel yet. But the the risk model was showing you that we were all the way up here nearing the this top echelon, and that indicates that you're likely very close to a market cycle top. And in fact, we've seen this in every market cycle back in 2017, and then even going back to the 2013 cycles. Okay, so I think there was a lot of misinformation going around, and there will continue to be that on YouTube, because you have a lot of people who just simply, are in YouTube in order to profit off of their viewers, or they simply aren't informed about how markets work. And that's how you get this rampant, degree of misinformation that I feel like is something that I constantly have to combat on the show. But, it is what it is, and that's just a part of, dealing with crypto. In this time, Bitcoin has been showing weakness since November, the end of November. And if you look, it's not coincidental. The stock market has went below its 20-week moving average, below its 50-week moving average, as Bitcoin has went below its 20 and below its 50. All right. Now, what I want to talk about today, in addition to that, and this is perhaps the more important point that we're going to discuss today. Okay, so the chart I have pulled up now is just the stock market. And instead of using the 20, 50, and 100-day moving averages, now we're looking at the 50, 100, and the 200-day moving averages. And by the way, if you're interested in this metric, it's available for free on the Discord channel. And to use it, all you do is you'll hit the settings tab, and for inputs, you can pick the moving averages you want, and then you can come over to style and select, if you don't want to see a particular moving average for whatever reason, you can select these. There's some other options in there you can play around with it. It's a pretty self-explanatory metric. So this is the stock market during the period in which Bitcoin has been around. And remember, we're looking at the 50, 100, and the 200-week moving average now. So when Bitcoin is below its 50-week moving average, it's in yellow. When it's below its 100-day moving average, it's in green. And if it's in red, which in fact we only see one time right here, just a blip, during the COVID capitulation event, it's below its 200-week moving average. Now, let's go back in time. So, when people talk about the worst case scenario for Bitcoin, what do they usually reference? And they usually reference the 200-week moving average as being a worst case scenario. Okay, so we've come down and basically held the 200-week moving average as support a few times in Bitcoin's history. So back in 2015, here in late 2015, here in 2018 into 2019, and then here at the COVID capitulation event. So these are times when, this has been a worst case scenario for Bitcoin. And by the way, currently the 200-week moving average is at around $20,000. Okay, so this is what you hear a lot of people referencing as the worst case scenario for Bitcoin. But I'm going to show you why I think that is incorrect. So notice right here, this is, like I said, the time where Bitcoin has been around. So we're basically looking at a period of unimpeded bull market. There have been very few times where basically here we had 2015. This was, one of our worst times here, 2015 to 2016, where we were moving sideways, unable to make a new all-time high. We had another fairly severe period here in late 2018 into around, middle of 2019, where we were kind of moving sideways. We went down and then up, and then it took a bit to get back to a new all-time high. And then right at the very beginning of Bitcoin's price history, back in 2011, the NASDAQ was just kind of going sideways from 2011 all the way through the beginning of 2012. So this, in the grand scheme of things, is child's play. This is nothing. A few corrections. We had the COVID capitulation event, but I mean, that lasted from February until May, until we were making new all-time highs again. Okay? So during that time, we've moved up from, like we said, around the mid 2000s up to a peak at around 16,000. Let's go back right before Bitcoin was released. And let's just see what happened in the market. Well, Bitcoin, or the NASDAQ composite, was down around 55%. And during this time, it took until we were consistently able to make new all-time highs. It took around 1,554 days. Okay, it took about 4 years to get to new all-time highs. Okay, so we trade crypto. That's not the end of the world to us. Let's go back to the year 2000 during that crash. The market crashed 78% during that time. Okay, and this crash extended over a 945-day period from peak to bottom. How long did it take us to get back to our prior all-time high, break above, and consistently stay above? Well, we got to it right here in 2015, and then we needed yet another about year to year and a half in order to start making consistent all-time highs all the way out to July of 2016 for a grand total of 5,971 days where we were down, unable to get back to our prior all-time high. So this is much more in line with a worst case scenario. Now, notice we have been below the 200-week moving average one time right here for one single dot. Now, compare that to 2008 through 2010, where we were below this period, and we'll just take another measurement. We'll just go from this period here where we were consistently below it. It was about 518 days, so about a year and a half. Okay, so a year and a half, we were below our 200-week moving average for about 518 days in the stock market, not Bitcoin. If that happened now, when you see the stock market go on these large corrections, you typically see crypto react much more severely, especially as, everyone says, oh, the big time investors, the institutions are coming in. All these big companies are buying Bitcoin. Hedge funds are getting into Bitcoin. If you think that hedge funds are going to be sitting on massive amounts of Bitcoin while the stock market is doing this, going down 55% down to 80%, you're fooling yourself. And if you don't think that this can happen again, you're especially fooling yourself. And I presume that you're either new to investing or you're just, in my opinion, I hate to say this, you're being naive. If you're listening to people telling you that something like this cannot happen again, because I assure you, my friends, this can most certainly happen again, right? And in fact, I would go so far as to say, as something like this happening, in the majority of our lifetimes, something like this happening, it's not a, if it happens, it's a when it happens, okay? These things just occur. Market uncertainty, macroeconomic events, when they coincide and things start to get ugly, it can spiral out of control quickly. Now, this isn't to say that, it has to be like it was in 2000. It could certainly be much more similar to like it was back in, 2007, 2008, or it could be even worse. That's the whole point, though. We don't know what series of events may play out that would lead to a situation where the markets just crumble. And this is just to show you that if you are, operating in a way such that you do not believe anything like this can happen, I'm just here to, inform you that truly it can, and I believe that is an objective fact. It's not a subjective opinion. I'm saying this to help you realize that, we have been investing in a crypto market during this, a blue line only type market. Red line markets going down to these severe corrections. In fact, the moving average I have selected here is the 1,000 week moving average. The stock market in the last 22 years has been down to the 1,000 week moving average twice. So here in October of 02, and then it went below it in December of 08. So keep this in mind, guys. Just, this is why we always say you should dollar cost average into the market. It's not financial advice, but if you're lump summing in and you're doing it here in, let's say, 99, well, you're absolutely annihilated and you're not getting back above your cost basis all the way until out here in February of 14, all things being equal. So dollar cost averaging in and not investing money that you can't afford to lose is simply the most responsible strategy you can take and the most secure way that you can approach your financial future. So again, guys, I just wanted to show you yet again, I talk about it a lot on the channel, but I think it bears repeating because I think a lot of people lose sight of the fact that this has been our market for the last 12 years or so, whereas these markets do exist out there, okay? They don't happen all the time, but they do happen. So we could very well skate by and, this could be a small correction. Everything could turn out to be okay. But whenever you have a lot of negative events brewing like they are right now, you need to at least consider the situation and consider what your potential downside risk is. Now, with that said, everything, like I said, could be fine. We could turn around. We could start making new all-time highs next week. But if you're someone who doesn't want to hear what the potential downside in your investment is, if you do not want to approach the market responsibly and understand both what the upside and the downside is, you're on the wrong channel, bro. So that's it for this one. Until next time, as usual, see you.